Welcome to Mex Moves, the weekly podcast where Damián Fraser and I, Eduardo Garcia, we break down the topics and headlines shaping Mexico's business and financial landscape. Hi, Damián. How are you today?
I'm good. How are you? You're in France?
I'm in France. You're in London. We're a well-traveled
No, I'm in the north of
podcast
Scotland.
host.
It's far away from Mexico, but it's still close to our minds and our hearts.
That's correct. We keep a close eye on Mexico. And with that in mind, this week we have one interview with Francisco Ruiz Maza, head of Russell Reynolds, a prime executive research firm, to tell us all about headhunting at high levels. Obviously, before that, we will review some second quarter earnings that were posted recently by Mexican companies traded on the Bolsa. A little bit about iceberg lettuce from Taylor Farmers operations here in Mexico, blamed for an outbreak of not very pleasant, I guess, digestive problems in America. Also about Casa de Toño, a potential target for acquisition. And a bit about consumer spending coming back based on América Móvil's sensitivities on prepaid telecommunication services. So, Damián, do you want to kick us off with a few second quarter earnings?
Sure. So we're in the middle of the earnings season right now, so we don't have all the results. But I think there's some kind of conclusions that we can draw. I mean, first, the consumer was weak in the second quarter. I think some people had hoped for a kind of World Cup boost, but it didn't happen. So Walmart Mexico, or Walmex, reported generally soft numbers. They cut their guidance for the rest of the year. Alsea reported negative same-store sales in Starbucks division, and also had soft earnings, although expected. Chedraui had weak numbers both out of Mexico and out of their division in Southern California, which was sort of hit by the immigration crackdown among other issues. So we saw weak consumer numbers. I think not a big shock, but maybe they're slightly below what analysts had been and investors had been expecting. In addition to that, Televisa, its main division, which owns roughly 45% of Televisa Univision, also reported weak numbers. They had a lot of expenses related to the World Cup, and though advertising and VIX did well because of the World Cup, it didn't offset the increase in expenditure, so their EBITDA was down. I think the reasonable bright spots were banks. Banorte's numbers were pretty solid. Santander, which reported out of Spain, reported good numbers out of Mexico and the US. So credit growth continues to be relatively solid despite the lack of overall economic growth, and asset quality or non-performing loans remain very much under control. So Banorte did quite well. América Móvil that you mentioned, Eduardo, also I think the stock has performed well, but also had good numbers, and their kind of guidance was that the economy is improving a bit, and they're often a kind of bellwether of how things are going to be. And then on the commodity side, which is now actually from a market value point of perspective, the biggest sector of Mexico, Grupo México Peñoles, Mexico, the numbers were really good. So Grupo México, helped by these very strong commodity prices, copper prices in their case, did really well, and their numbers surprised on the upside. Aviation, Volaris specifically, was more of a challenge because you saw weak passenger numbers overall, plus clearly higher costs driven by the increase in energy prices. So I think we're halfway through it, but so far at least numbers are slightly on the weak side, not a total shock, but some big kind of bellwether stocks like Walmart or Chedraui, clearly disappointing slightly the market as I think the Mexican consumer is not there, but also they're losing. It seems to be that these kind of incumbent players, at least on the consumer side, are losing a bit of market share against some of the disruptors, on the e-commerce side against Mercado Libre and Amazon, and then on the hard discounting side against Tiendas 3B. So it's not just the consumer, but some of the more kind of traditional companies are facing competition that's hurting their market share.
Yeah, I think it resembles the earnings that we have seen so far, what we had been watching over the past few quarters, with banks doing well, retailers not so much, with the exception, as you say, of probably the e-commerce or the low-end retailers. But if I may jump ahead just to bring in a little bit of why América Móvil is giving us a little bit of hope that the consumer spending might be picking up again. And that is because they saw growth in their prepaid telecom services. So it resembles the story that we have seen before, and that we've talked about it, like you said, in the retail sector, where companies that offer low prices are doing better than those that are the incumbents or traditional ones. We have seen it in the auto sector with low-end autos doing much better than higher-priced cars. And now the telecommunication, from what América Móvil said in its conference call, is that prepaid mobile services are growing again. And the company's CEO, Danny Hash, told investors and analysts that since the company had seen a slowdown in such purchases, and now is seeing a certain amount of rebound, he concludes, and we hope he's right, that consumers are buying more prepaid cards with greater amounts than before, and that might be a sign that the economy is probably bouncing back from the lower rungs of the population upward, and so that is a good sign. Also, just to go a little bit deeper, América Móvil made news by announcing an acquisition of an internet provider in Peru called WOW, which has a little more than 500,000 internet connections, and they are mainly outside the country's capital. And now, for América Móvil, it's a small transaction, but it's growing in one of its main interests in the region, which is the fiber optic segment. Before they announced this transaction, they had already purchased another similar company in Brazil called Desktop. And so with the WOW's acquisition and its current internet connections, América Móvil will be dominant in Peru, having about 1.1 million clients, or about a 37% stake in Peru's internet market.
Yeah, they mentioned in the conference call that they were looking for acquisitions, but in countries where they already are, for the most part, and where they can grow their market share and consolidate the sector. Right. And that's very much the slim playbook, which is be big, be powerful, have pricing power, and as a result of that, you get better margins, better cash flow to your shareholders, and these acquisitions certainly will help them achieve that. So shall we move, Eduardo, to La Casa de Toño? I think many of our listeners at least, would have seen the Bloomberg story about this restaurant chain, but which sort of famous for its pozole, very popular, kind of middle-income restaurant chain, mostly in Mexico City and the surrounding areas. They have 81 restaurants. The Bloomberg story said that they're looking to sell it for $400 million, which apparently would be 8 times EBITDA, roughly 8 times EBITDA, which would mean that their EBITDA is $50 million. This got, over the last day or so, got a huge amount of press coverage. I was sort of slightly amazed that this kind of middle-income restaurant chain is worth so much money and is so profitable. I mean, I think the different things to say about it. Well, first of all, do you know the chain? Have you been there? Are you a Pozole fan?
I'm a big Pozole fan. There was one Pozole place near my house called Flor de Lis. That was many years ago. It shut down. And now Casa de Toño has been the one that has replaced for my family gatherings when we want to have some Pozole. That's where we go. But it's grown very quickly over the past few years. And it started, I think, as a very small little restaurant place where Toño was the owner probably. And they've expanded quite rapidly. And they do it, what is really impressive, Damián, I don't know if you've been, it's how fast they provide you services. You're in and out like a fast food company, but with a little bit more taste, I would say.
Yeah, I mean, I have some friends with restaurants of that nature, and it's all about turning over the tables, right? Because you have these fixed assets. So if you can get people in and out in an hour or half an hour or 20 minutes, and you're getting the same ticket, it's like an airline, right? You're making more money, and you're keeping your customer happy because many customers want to be in and out, quickly. So they've standardized the process. As you say, it's grown to 80 restaurants or so. That kind of means that based on this 50 million EBITDA, they're making maybe $600,000 per restaurant in EBITDA, a couple of $1 million per year in revenue. So it's each one of these restaurants, because of this huge turnover per table per day, making them a lot of money. Now 8 times is a big premium to Alsea or to some of the other publicly listed restaurants. So if someone pays that, because they think there's a lot of growth, and because Casa de Toño is very focused on Mexico City and the surrounding areas, the idea, according to the Bloomberg story, is the new buyer, if there is a buyer, will take it to Latin America, to the US, to other parts of Mexico, and basically replicate this formula. Now, I'm slightly surprised that the owners, Toño, wanted a story like this to be placed. I think there's plenty of ways of communicating that information without making it so public. He's kind of putting a price tag in a difficult country on what he's worth, which might be a bit awkward and risky. And at the same time, if it doesn't sell, they're a little bit burnt. So I don't know if he'd be too happy that BBVA or whoever it might have been sort of leaked this story to Bloomberg. And also, I think that what they got was a sort of investment deck where you have a sort of aspirational valuation of 8 times or whatever it might be, but it doesn't mean that there's actually a bid. Now, Gigante put out, which has talks, put out a release saying they were interested, but nothing has been concluded yet. So maybe those talks have advanced. Clearly, they are interested, but I think we have to see if they actually achieve this, and if there are any kind of strings attached, like performance fees, conditional price relative to future EBITDA and stuff like that could make it a little bit less exciting than the $400 million. But it's only become the sort of viral story of the week in Mexico, that something like this could be worth so much money. I don't think people who go there would have imagined that.
Never in a million times. But maybe it's also a strategy just to try to put a high price and then sell it for less. I don't know. But it's, like you said, it's a very high valuation that even with growth potential might not be justified. No, I mean, yes, it's Mexico City Center. It's quite successful. You've seen it grow really fast. But it comes with a lot of issues, I guess. I mean, running chains is not it's easier said than done, so we'll have to keep an eye and see whether first it materializes and second at what price it does, if it does.
Now, there's a great story in our sister publication, white paper, authored by primary author Daniela Dip on Casa de Toño about a year ago, before people were talking about it so much, about how it's been so successful, its origins, how it's been able to sort of industrialize good quality food at low price. So people who want to go into more depth, I strongly recommend they read that, Daniela's story.
Good, yeah. And if they're in Mexico City, take a look at how quickly they can provide you with this pozole and fried flautas in and out, like a taqueria sometimes, on a more elaborate type of food. Not that it's that sophisticated, but it's of high quality and different versions in a very quick manner here, in and out.
And talking about food, Eduardo, have you been following the Taco Bell salad crisis, which is becoming, more serious as we speak?
Yeah, I mean, it's been getting a lot of attention in America and in Mexico for obvious reasons. Taco Bell apparently was the site of an epidemic due to lettuce bought from Taylor Farmers, which has operations of iceberg lettuce here in Mexico. And at the very beginning, it seemed like it came from them, from a plant in Guanajuato, if I might recall correctly. But then it was false positive, but it's not clear that they've been cleared of having the problem with their lettuce coming out of Mexico. The New York Times even did a profile on the town and how it might impact the local community. And the local community was always saying, they're always blaming us. We still eat our lettuce, nothing happens here. But it's a big issue, and this type of, this is not the first time that produce out of Mexico have been found contaminated with certain bacteria or parasite in this case. But we'll have to wait and see whether it was from the Taylor's farm in Guanajuato or not, and then what measures should they take to correct the problem. Obviously, this is a bad image for Mexican produce in general, I think. It's not the first time they've overcome some difficulties like this one, but it's a black eye, even though it's an American company that runs the farm and where they chop and package the lettuce to be sold in America for Taco Bell.
Yeah, I read today in Reuters that Taylor Farms has actually temporarily closed the processing center in Guanajuato for the iceberg lettuce. So, it's no longer working as we speak, apparently. And Taco Bell has obviously gone into sort of full crisis management mode and said, you're never going to eat another iceberg lettuce in your life if you go to Taco Bell. So don't worry. There was a story in the Journal today. Their crisis management sort of campaign has been kind of quite sort of strongly criticized by sort of slightly making light of what is a pretty serious medical issue for the people affected, and thousands of people at this point. They're saying, we're no longer buying from Mexico. So, obviously they have to do what makes sense for their shareholders and their brand. But it's, if people aren't putting the salad in the tacos, then they're not buying from Taylor Farms, and the plant eventually, has to close down, even if it's temporary. So it's a problem, and people may lose their jobs, as well as obviously the medical issue in the US, because although no one has died, the medical consequences are very, very, very disagreeable, to say the least. So it is quite a big problem. The Mexicans say they're investigating it. The COFEPRIS and other regulatory entities are looking into it, but they haven't found anything, as far as I know, specific in Mexico, and it could be, in the transportation, could be, when it arrives in the US, we don't know. It would also be a mistake to say it isn't in Mexico, but there's a lot of uncertainty. I think the FDA in the US got quite a lot of egg on their face by, even though statistically these things happen, with their false positive saying that they found, evidence that it was this specific salad in Mexico that was causing the problems, and then saying actually it wasn't the case, but nonetheless they're sticking to the hypothesis that the fault is in Mexico. I mean, it's a tough narrative to manage, and so the FDA, I think, has struggled a bit with this issue. But there's no question that it's bad for specifically this plant, but not good for Mexican food. Taco Bell sales are cratering. I read somewhere that sales are down like 30% or so the last couple of weeks, and you can understand why. People can have a million options to buy and shop and eat wherever they want. They're not going to be going to Taco Bell while there's this kind of uncertainty on what consequences it might have.
When once you get branded or your finger points at you, it's really hard to take it off. And when there were so many people feeling horrible because of this lettuce, it's hard not to think that people would be frightened by what they heard the first time and then change their minds and say, oh, it's not from here, it was from other place. So it is a black eye, and unfortunately it has happened. I mean, I think Chipotle had a problem as well in the past. They've overcome it, but it's always a source of pain for those that eat it, without a doubt, and for the companies that have to clean up their act after whatever they found, the authorities. So it's an evolving story, but it has created pain, like you said already, with consumers and by temporarily shutting the plant in Guanajuato.
Something similar happened about a decade ago in the UK. I don't know if do you know a Mexican restaurant chain called Oaxaca, spelled
Yep.
Wahaca. Anyway, they had 2016, a long time ago, but they had a sort of a norovirus in some of their sources, I think, that caused several hundred customers and employees to get quite ill, and their sales sort of cratered, and they were able to come back, but just this week or last week, the British press has reported that the ownership of Oaxaca was acquired by Risk Capital Partners. That's a private equity fund focused on the restaurant industry, owned by Luke Johnson, was behind Pizza Express and then Gales, which is very sort of omnipresent here, and he sort of picked it up. But Oaxaca struggled a lot after that crisis, which sort of made the Daily Mail. These are difficult things to navigate.
Yeah, Taco Bell had done a good job in trying to lure younger customers. So this is going to be painful for them without a doubt. Even though the finger is being pointed to Taylor Farms, I think Taco Bell also gets a little bit of a black eye, and we'll see how they can overcome it.
Yeah, I mean, in the Times story, they said people in the town in the state of Guanajuato sort of said that they're not ill and they're eating the same like salad. But then they said, well, maybe Mexican stomachs are more used to these things than American stomachs. Definitely, when I first came to Mexico, I was much more sort of sensitive to food than my Mexican friends. I think your stomach does get a bit used to these things.
Yeah, I think that's fairly accurate. You get used to a certain type of ingredients in a food, and then your immune system helps you control them. And if you're not used to them, I mean, if you go to India, sometimes you get sick, or you go to China or whatever, because you're not used to some of the salts or whatever. I don't know. I'm not a doctor, but it happens, and unfortunately, it happens. And this is something that Mexico has to be very careful about it, so that it doesn't get chastised as a place where unhealthy food is produced.
So moving, Eduardo, to quick takes, just to wrap up for the week. Good column, as is often the case from Enrique Quintana in El Financiero, Mexico's economy may have rebounded a bit in the second quarter. Now that's a little bit inconsistent with some of the stuff we were saying about second quarter earnings, but obviously the stock market doesn't reflect the economy overall. But based on the sort of quick economic data that the INEGI has been putting out, Enrique saying maybe the economy grew, over 1% in the second quarter, which versus stagnant growth in the first quarter. So there might be some signs that things are improving, and even in some of the quarterly earnings calls, like Alsea said that the second quarter kind of started very weak in April, but things improved as the quarter went on. So maybe the very bad numbers we saw at the first part of the year are not indicative of how the year is progressing. And Banorte in its conference call also talks about how it was expecting a stronger second half than the first quarter, which we would hope is the case given how weak the first quarter was.
Yeah, it seems that that's happening. On my side, just a little note on Grupo México announcing intentions to expand its rail services business to Brazil and Argentina, mainly to Argentina. As we know, Argentina is privatizing its rail services, and Grupo México seems to be interested in them. The company is just waiting to see under what conditions the Argentine authorities would license its cargo rail services. Grupo México's executives even said that Argentinian authorities have consulted many companies, one of those being Grupo México itself, and they feel quite satisfied with the interests the authorities had in what they had to say about how the licenses should be auctioned. According to Grupo México, Argentina rail's assets will likely require investments of about $3 billion over the next 5 to 8 years, and that it is that the Argentine government is seeking to privatize or license about 10,000 kilometers of rail lines. So the program is on the works, but Grupo México seems quite interested in taking part of it. We'll have to follow the story as it develops.
This week on Mex Moves by White Paper, we speak with Paco Ruiz Maza. Paco is the country manager for Mexico at Russell Reynolds Associates, one of the world's leading executive search and leadership advisory firms. Paco advises companies on CEO appointments, succession, board composition, senior leadership, and I hope we'll discuss Mexico's market for top executives, boardroom dynamics, what distinguishes an exceptional CEO from an average CEO, and issues along those lines. Paco, thank you very much for joining us.
Damián, thanks for having me. Delighted to see you.
Likewise. So why don't we kick off with Mexico's kind of CEO talent pool? How would you compare Mexico sort of CEO, C-level leadership to other countries like Brazil or US or Spain? What makes Mexico different? What makes it similar?
I always like to say, Damián, it's the right person in the right place. All right. So it's a little bit tough of just, generalizing according to geography, because what I can tell you is what good CEOs or the best CEOs need to do in Mexico to be successful. Okay. And how transferable that is, which I think is hopefully addresses your question. I mean, there's undoubtedly a lot of talent, but what I think is fascinating, and I've seen this particularly the past 10 years, is the complexity in which CEOs in Mexico operate. Prior years, high inflationary environments, which was kind of unseen in some developed economies, but kind of our daily bread in Mexico and Latin America, whatever that does for your commodity prices or your impact on consumer prices, etc. And CEOs in Mexico are used to doing this. The mindset working around pricing is perhaps much more agile that I've seen in other places. Then you've got, of course, the whole social political arena, and how you address that, how you are effective there. Some opt for being more visible, some opt for being under the radar, but it's deliberate. So what I'm trying to say here is, you know, successful CEOs in Mexico need to be fairly broad in their abilities. There's a disproportionate amount of family-controlled groups in Mexico, pretty much LATAM, and that also demands a certain skill set. The interpersonal sensitivity around this, the judgment, understanding a number of the unwritten rules and nuances of operating with these families. So what I'm trying to say here is, in World Cup mood still, the CEOs in Mexico need to play pretty much every position, because it's not sufficient to, just to stay completely in your lane, because the market demands a much broader appeal.
And has it evolved? You've been at Russell Reynolds for decades now. Has the requirements for Mexican CEOs changed in 2026 to 2006, let's say?
I would say yes. And I would say it's primarily driven by the expectations of the board. So it's the demand that changed the supply kind of thing. What I mean by this, disproportionately in the past, I would say boards and families would, put trust as the primary consideration, when working with a non-family CEO. And not that it's not important, but in my perspective, that's kind of more binary. It's, you either trust the individual or you don't. It's kind of, I kind of trust my CEO. That's never going to work, and it would be a poor idea. So if you move beyond the trust conversation, if you go beyond that, then the talent pool increases dramatically. But it's because it's not only the people that that can be good CEOs. It's perhaps the people you don't know who's the best CEO for your company, and that, as a consequence, has incredibly raised the bar in terms of what's expected of CEOs. And of course, every company and every family is different. Some are going through investment and growth cycles. Some are kind of holding the fort in some regard. But yes, it has changed. It's become much more sophisticated and nuanced and competitive. As the market has grown too, and as the broader geopolitical conversations that we've all experienced, well, if some of the major groups, as have opted for, investing in other regions, well, that on its own demands a different breed of CEOs. Is the multiculturality, the intellectual interest, the need to navigate different cultural environments, etc. So it has changed, and it continues to change, and I can only anticipate it's going to continue evolving. When you're talking premier athletes as CEOs, you're reaching international standards. You're reaching international benchmarks of competencies, sophistications, and ability to drive value.
I mean, one of the differences that I noticed between CEOs here and elsewhere is, and you alluded to this in your first comments, is they tend to have quite a low profile in Mexico. You don't in the US. You have the Solari Finks and the Jamie Dimons, and these are household names. They're typically on their own earnings conference call. They typically write their own kind of letter in the annual report. They're often very visible on LinkedIn and Twitter and so on. Whereas in Mexico, with the possible exception of Ricardo Salinas and Carlos Slim, they, generally speaking, have very low profiles. Do you agree with that? Do you think that will also change, that we will expect CEOs also to be more public personas in Mexico, and that will be a requirement when you go out looking for a new CEO?
I think there's a structural difference that we need to talk about, Damián, because I think the visibility is kind of the consequences of, structural or fundamental differences. First of all, it's the ownership structure of the major groups. And let's get on a discussion, because we tend to assume what CEOs are. There's a conversation to be had around, if you're speaking chief executives in Mexico, by definition, you're probably speaking about Mexican companies. What I mean by this is, for multinational, there can only be one CEO, okay? And if you're a multinational and headquartered in Europe or the US, well, that's where the CEO sits. Mexico might be a huge operation, but you report to headquarters. So let's just clarify what CEOs are and where do they sit in the hierarchy. And if you go on to the local companies where the CEOs are the global CEOs, then the first bifurcation is the CEO owner or is the CEO executive? Because the gentleman you've mentioned, I mean, they are CEO and they are owners, so it's kind of one and the same person. And it's never. I don't think it's a good idea if you're an executive working for a major family or major Mexican group. To be too visible. It's not your role. You're unless you're demanded to, or that's what the board expects. But there's this book about the 48 laws of power. You might have read it. And number one is never outshine the master. So it's not a good idea if you're working, for a family business, etc., to be more prominent than the family. I don't think that's sound judgment. Indifference, or in contrast, more better said, the majority or disproportion of U.S. companies are, completely fragmented ownership. So, and if on top of that you add the layer of, much debated, and we can speak some other time of, it's chairman and CEO, then there's an omnipotency component to why these individuals are so visible and so grand, and quite openly why they have so much control even over their own boards. I mean, you're the chairman, you're the CEO, and there is no, major shareholder other than perhaps some institutional investors behind, which, will have soft power over your company, but not necessarily an individual with the last name sitting at the table. I think that's what drives, in my perspective and my experience, a big difference. And then the other is this relationship with government. I mean, sometimes it's not a good idea to be very prominent. You don't want to be mentioned in the mañanera. Let's be transparent. I mean, that's hardly ever for a good reason.
In Mexico, it's quite difficult to take over in a hostile fashion a company, because they tend to be family controlled. If they're not family controlled, they're often poison pills that in any case make it difficult. Do you think that also explains why CEOs tend to be quite kind of low profile and cautious and prudent and conservative, because they don't face too much of a threat of losing their job as long as they get on with the family?
Yeah, you gotta get along with the family. It's just common sense. You gotta deliver. But what I do tend to see is, yes, perhaps you have less of a scrutiny of a potential activist investor. It's interesting. We at Russell Reynolds, we never side with the activists. It's kind of a mantra of ours. We don't necessarily share that perspective of short-termism at times and opportunistic value creation. We're more of a longer-term perspective, in siding with the people that are there for the long run. What I do think is important, and it might be correlated, but not in the sense of the hostility of the market. I think it's more of many of the Mexican clients, the major groups I work with, tend to have what I think is a fascinating perspective on the market, and I often share this, and I think it's quite unique, some more than others. Many are not public for financing reasons, which, as we all know from business school and all, is kind of you go public primarily to finance yourself out on the market. Many of them do this for governance purposes, for transparency and institutionalization. There is a cost, of course, when you go public, and there's administrative cost, particularly if you're duly listed, New York and Mexico. But the fundamental change in perspective, and most of these companies, they're closely held, to your point. So it's less of losing control, and there's, whether you agree or not, which is also another conversation. You got Class A shares, Class B shares, Class C shares, and you can keep control in the family trust or some other manners. But it's the notion, the market eventually should reflect the value that's been created, which is not necessarily the case for some other, highly pulverized companies, which is, to the extent of working for the share price, because, the share price drives the mood of the day, of the week in the company, whereas Mexican groups, at least in my experience, take a much longer term perspective. I tell executives, particularly CEOs, when they're, on the processes we do of joining companies or these groups, is I believe when you can tie in, a high degree of family involvement, family businesses used to be ostracized, 15 plus years ago, because they were deemed not institutional, or that they would have, less governance than others, and might be the case in some instances. But in my experiences, when you can tie in high family involvement, which means long-term perspective, more of an a business across generations view with governance, that's a sweet spot for management. Because you're not thinking of the week, not even the quarter. You're thinking in a tri-yearly or longer term horizon. But there are rules. There's groups, there's governance, there's boards, there's committee, there's rules of engagement. So it's not like, how did the patriarch or matriarch wake up this morning? That's the course of the business, because there's structure around this.
So I have a few friends on boards of Mexican family-controlled companies, and they say, it's prestigious, it's often great fun, sometimes there's decent amount of pay, but ultimately, since the family decides, who's going to be the CEO and what the strategic direction is of the company, the board itself, if you're not a family member, is a little bit superfluous and sort of unnecessary. Have you work a lot on boards. Would you agree that boards in tightly controlled family companies are slightly pointless, and the real decisions get taken at Sunday dinner between the patriarch and his children?
I think that used to be the case, Damián. I think that used to be the case for many boards. Even the notion of independent director was completely misconstrued. There's cross-board. I mean, if you're sitting on my board, I'm sitting on your board. We're both sitting on Eduardo's. I mean, at some point, the independence decreases. You've been on the same board for 15 years. You become kind of a part of the furniture by now. I mean, you're no longer independent in that respect. But putting that aside, what I see is a fascinating change, and perhaps it's correlated with generational change in the families. The next generation that's taking over, they're very quickly coming to the conclusion that I'd much rather have the tough conversations in the boardroom versus in the market. I'd much rather get pushback on certain investment decisions and capex allocation, etc., from my board than once it's done, and then I'm feeling the heat on margin or debt or any other front. So I'm, it is solved by, we're still far from it, but it's changing, and it's changing much more rapidly than I would have anticipated. Are there plenty of boards where one board member told me, he got invited, similar to what you were saying to, so he's, prepared to the board meeting, and then he's asking for the materials and they don't arrive. and he arrives the day of the board and he hasn't seen anything, and he's sitting down and like, okay, where are the materials? It's like, oh, no, we're just here for the lunch. I mean, we're going to sign some papers and we're here. But I mean, yeah, do we have still a little bit of that? Yes, but the companies I respect the most, I would say on the contrary, the level of scrutiny, governance, and expectations of the boards is much more. Here's a fundamental difference, which I think is enlightening. Some publicly traded boards, companies, I'm sorry, the boards, it's more around the market scrutiny and the regulatory compliance, of meeting and having the board and all that. So it's more around, let's get the formalities and the legalities in place. When on the other is, no, let's have a conversation. I mean, let's truly have a conversation if this is a good idea or not. Any board member that prides themselves in being professional, but I mean, by the third board that you've discussed something and it's not taking into account, well, you're probably better off somewhere else. So even just the dynamic and the seriousness of these conversations, it is no coincidence that the best companies tend to have the best boards, period. Because you attract the best board members, and as a consequence of having the best board members, you've got better governance and better discussions, and it's kind of a self-fulfilling, evolution in that regard. We're still far from, from where we need to be, but I also think governance is kind of like being in shape. You never stop being in shape, because the moment you stop, you're done. The same is with governance, evolution, and institutionalization. You've got to keep at it. Still plenty of those around, but the best in class and the ones that take it even more seriously. And I mean, many of them are even private companies. They're not even in the stock market. They're private companies, and the level of scrutiny and governance expectations is, very, very, very high.
And how do you go about finding board members? Because I have a bunch of 60-year-old friends that get fired from their investment bank or their accounting firm. They have to retire, and they say, "Well, I'm going to be a board member now," and then the phone call never comes. And how do you, how do you pick certain people and not other people? Is it all about the team and diversity and having the right number of women and men and the right number of accountants and lawyers and IT people, or what are the factors that drive the phone call to the individual to ask him to interview for the process?
There's always an initial conversation when I'm having with the chair or head of NOMCO, or around engaging in looking for board members. And many of the times I sit down with the board and they already have names. Oh, why? Damian's fantastic, or Eduardo is fantastic, or Maria is fantastic. And I deliberately pause them and say, yes, maybe Damian is fantastic, but maybe that's not what you need. I mean, let's stop discussing individuals. Let's start discussing what you need. I mean, where's the company heading? What's the strategy? Where are you allocating your capital? Let's understand what you're doing. I mean, what you're doing or what you're trying to do here: diversification, international expansion, or you're in a much dire situation. It's more kind of a turnaround. Only then let's take a look of who's sitting at that table. And then let's define what are the voids that you have in order to achieve the strategy we've just discussed. And only then would Maria make sense, or Damian, or Paco, or they might be not what's needed right now. If your whole play is international expansion of your consumer companies and your brand is growing old, well, it doesn't really help much adding another former investment banker to the conversation, or a former, let's bring a marketing executive. Let's bring an e-commerce individual into the conversations. I also think, and I'm very critical of what board members need to bring to the conversation, and we define them at Russell Reynolds kind of more as a T. You've got to be very deep, or deep enough in a couple of issues, all right, to differentiate yourself in the market, but you got the top part. You got to be broad. You don't. A board seat is too priced to bring in, mono subject experts. You gotta, yes, command an authority on a couple of topics, but be versatile and broad enough to cover several issues. So what I would say to your, for the conversation to happen, it's, there's going to be an alignment of what's needed there. And demographics, I mean, diversity is good for diversity's sake of discussion and perspectives and backgrounds and approaches to problems. There is the factual demographics of, gender diversity, racial diversity, very highly scrutinized in the U.S., but it's a thought diversity that you should be after. So at some point, yes, I mean, if your background and your experience, etc., is perhaps over-indexed on many of the boards, that call might take longer to arrive. If you bring a different, unique view that's highly complementary to the board, then call will arrive probably earlier than you would think. That's how it happens in the end.
I mean, some people complain, rightly or wrongly, that what the board wants above all is loyalty to them. I mean, to the family or the controlling shareholder or to the CEO, whoever it might be. I mean, have you, in your own experience, without mentioning names, obviously, have you seen likely loyalty to the current controllers as a key litmus test?
I wouldn't say loyalty, because let me backtrack here. I think the most important conversation that a new board member needs to have with the family or founder or chair or whomever controls are the expectations. And it sounds pretty obvious, almost cliche, but it's what do you expect? Because if the expectation is not to make you uncomfortable, challenge you, and just approve what you're saying, well, let's have that conversation. I mean, let's just have it. I want to add value. But in this discussion, there's also criticality of understanding what you're getting yourself into as a board member. It's this nuance of, when do I push? When have I made my point? When have I raised the issue? But they're going to go some other way, and I've got to be at ease with this. Because loyalty by itself, I think, would be, a very limited competency of a board member. And what you might understand as loyalty might be, blind loyalty to whatever I say. Whereas I might think I'm actually being incredibly loyal to you by harassing you in a meeting when I think you're going to make a crass mistake that is going to cost your family and your company a significant amount of money. And I think I'm being loyal, but you think you're being disloyal. So that, kind of mature discussion and conversation is very important. And you need to have it. And you need to have it ideally before joining, because otherwise things can get a little bit prickly.
Michael, last question on the business of executive search, headhunting, leadership advisory. How, with AI in particular, how is it evolving? How is the business looking today versus a decade ago? Is it a growing business, a shrinking business? How do you think it will be, especially with a focus on Mexico in a decade's time? You must have gone to a bunch of Russell Reynolds meetings over the last couple of years addressing some of these issues. Can you share some of your thoughts?
No, absolutely. 15 years ago when I joined, LinkedIn was coming out, and some people were like, "We're done." I mean, the industry's is done because a disproportionate amount of what we thought were our assets were closely held. Data of individuals and contact information, and the moment that kind of went public to some extent. On the contrary, I mean, it just catapulted us, in growth significantly. I see something similar with AI, and we've embraced it dearly, and we, as partners, we've invested significantly in leveraging that. I think now more than ever, Damián, I tell the team, we're in the trust business. In the end, we're not in the finding people business or analyzing databases. We are ultimately in the de-risking of key business decisions around leadership business. That's our business. And trust, like our grandmothers, it takes you years to earn it. It takes seconds to lose it. AI won't supersede judgment. AI can help you analyze better and process information better and make comparisons quicker and should make you more efficient. It's not going to make you smarter. Actually, I actually think it can make you incredibly dumber because there's this false sense of certainty. Oh, ChatGPT told me this. So I think we are primed for very, very good years ahead, provided we don't lose sight of what we're trying to solve here. When a board trusts you with the CEO succession, it's not because you've got the best algorithm and you're going to plug in, the competencies, and it's because they trust what they've said to you. You're going to keep it to yourself, use it selectively to assess individuals. You're going to understand the family dynamics. You understand the governance of the board, and you fundamentally understood where they're heading as a business and who can help them. So I'm actually pretty excited about what AI can do for our business.
Paco, thank you very much.
No, well, thank you, Damián. Lovely speaking with you.
Terrific. Well, I think that's it for this week. Thank you for joining Next Moves. Hope you join us next week.